I think you guys have already heard about the imbalance and liquidity sweep in smart money concept and ICT concept. But do you guys really have any idea that why these words has been used for the normal projection? Just based on the normal projection, you guys have considering that somewhat this is what the imbalance has created and this is where the liquidity sweep has been done. Just looking into the projection, was that a data was sufficient to initiate a proper trade? So when you fetch up these order flow footprint data, so somewhat we are getting this imbalance, liquidity sweep as well as the absorption on your footprint chart. So how do we look into these charts when it compares to the normal projection? So in this video, I'm going to explaining you about the imbalance, liquidity sweep and absorption by keeping this topic as a side by side, and how does this all this concept are similar when it comes to the filling these all the orders are filling the passive orders, but it has given a just a different name just because of how does the price is respecting to the particular volume, right? So our first point is our is all about the imbalance and what is the imbalance in terms of order flow, how it is creating and what exactly mean imbalance and how we can use these things, right? So first topic is all about the imbalance. First, let me tell you, in a footprint we don't compare our data like a horizontal, we do compare with a diagonally. So first of all, when you look into here, so these boxes has been I have marked with a yellow color. That means when you compare with the diagonally, and when it comes to the bid versus ask data, the ask data is three times and more than that the bid information, yeah, bid data. So this is called the imbalance. Again, if you see here, so these all these information are called the buying imbalance, and this particular which is plotting at the left side of the chart is called the selling imbalance. So if you see here, again when you compare the bid versus ask data, where the bid data is almost three times or more than the ask data. So whenever these kind of a difference we are getting when it compares to the bid versus ask data, which is three times or more than with compared to the normal bid versus ask, there is the imbalance is creating. So this is what exactly called as the imbalance when it comes to the order flow. But don't we don't compare any kind of an normally footprint, sorry, a normal projection with the gap between the three candle low and first candle high. This is what the SMC call as the imbalance. But in terms of order flow, this is what we call as an imbalance when we see three times or more than a three times order has been initiated at the opposite side, right? So again, when it comes to this imbalance are staying, yeah, it is plotting one above the other, where the complete stack has been created. This concept has been called as a stack imbalance. That means here are somewhat these kind of and passive orders are lying here. They wanted to control the price to keep the particular candle below this level, but really at the end of the candle what happened, the aggressive buy order has filled all these passive orders and they have pushed the market upside. That means the aggressive buyers are very stronger at this place. Again, the same concept is completely it's almost similar to the liquidity sweep. So what is going to happen in the liquidity sweep is almost the similar, but again somewhat by executing these many passive orders and closing above the price, this is one of the confirmation that market have the very good strength, the market can continue towards upside, and these kind of an actions where give you the idea that we have a very aggressive buyers and the buyers are interested to push the price upside. Again, we have one more same concept. If suppose the present candle close was somewhat here and we got this much of big wick, so again what we call this is, we call this is as a imbalance reversal, right? So again this particular strategy which is similar to the absorption, right? So if the particular candle closed here, the we can say that is the liquidity sweep. If the particular candle has closed here and we got above as a wick, then the same particular example we can call as the absorption. Again, see guys, these as I previously told you that these topics are almost similar, but they have given a different names when it comes to the price, how the price is giving respect to the volume. So if you see here, and somewhat we have a very great number of passive orders are lying here, and they wanted to control the price below of this level. They wanted to push the price somewhat below of this level, but due to the aggressiveness of buyers, the price has pushed towards upside. Means these all passive orders who they wanted to control the price, they have literally failed. Means the aggressive buyer has swept this liquidity which is lying here. Again, these information indicates we got the aggressive buying and the buyers are participating. The more aggressive buyers are participating in the price, and we can upset the market. This kind of an information that we are getting from the liquidity SIP. The only difference from the imbalance, if the price was closed above the passive volume, we call as liquidity SIP. If the particular candle has closed below these high volume liquidity, the same topic has been called as the absorption. So if you see the third example in the absorption, if you see the highest number of the buying volume has been initiated here, but why does the price haven't closed at this level or at this level? Because the all this buying volume has been absorbed by the passive order which is available at this price. This is the clear cut indication that somewhat these passive orders were absorbing, and we have a huge kind of an we can get some kind, these levels can act like a resistance for us. So in the order flow, we simply don't initiate our trade based on these weeks, based on the candlestick formation. We will compare with these are the next dimensional data what we are getting on the footprint information, and we look into these things, and we will try to get one of the high probability trade setups. And again, there is one more word I would like to tell you, that order flow is not a such a thing. You cannot apply each and everywhere. There are some specific key level. There only we need to combine these concepts, right? At the end of the video, there is only one word I would like to repeat it. These all the concepts were based on the liquidity and how does the price was respecting to those liquidity. Just based on that, these names has been given. I hope you got the idea between the imbalance, liquidity sweep and absorption. So if you guys have any doubts regarding these topics, comment in the comment section. Happy to help you or answer your questions. We'll see you in the next video. Tab tak ke liye have a happy trading. Thank you.